Hey, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. So what is my favorite day trading setup? It's top reversal is my favorite setup. And what does it look like? The best example that I could find from last week actually came on Monday, May 4th. So when I was looking at it and how you would look at it, I'm looking for a volume bar that's highest blue bar, and I want it to be higher than pretty much everything else around it, and then I want to get involved in it. So this is the trade setup that I want to show you. In the morning, what we're seeing right here, let me get my screen draw tool out. This was highest red, and then you see these blues right here. Now this one right here ends up being highest blue. So this is highest blue bar, and this is the highest red bar coming into the morning. So highest blue, highest red. But we see that there's 1, 2, 3, 4. There's a whole bunch of blues and hardly any reds right now. So what am I thinking of right now? I'm looking for the market right now. I'm looking for the market to set up and then for me to take a short down. As we're going to see here, the goal of this trade, it's on one contract, 1C, is try to take out 1P. Excuse me, 1.5P. 1.5P. You want a minimum of 1P before we think about going to break even roughly, and we want a minimum of 1.5P to 1R, so 1.5P versus 1R. Now 1R in this case is a little bit too high, so we want to go to 1.5, we want to go to 1/2 R. And that's because in Top Step Trader, you lose your combine above 50. On this day, just taking 1R on, you're at 46.2. So you want to come down here and look where 1/2 R is. And you're going to go at that. So this is going to end up being your stop, but I'm going to show you how you're going to set this up as well. All right. So let's take a look at the trade setup itself. So now we see where highest red and highest blue is. Let's go to the trade setup itself. It comes in right here. So here comes the high blue bar volume. There's nothing else around it as far as you can see. A lot of times I'll call this an HVS sky. Sometimes you'll hear me say that. HVS sky. There's nothing else around it that is anywhere near as far as the eye can see, right? It just stands out like the Empire State Building would have stood out back in New York City back in the day, right? So it stands for high volume spike skyscraper. That's how I look at it. So it stands out all by itself, and it's a good indication that the market's ready to top or will be topping soon. So this is my favorite trading setup that I'm looking for. I see it right here. You see some lines I've got already listed, and these are two places that you could get involved in it and still win this trade. All right. So you're going to measure 1.5P from the top. In this case, it's 20.55. Now, 1.5, I always call this my break-even decision whenever I'm looking at something. So this is the minimum profit that I'd like to get on a trade on the break-even decision. This, if I know if I can hit this a couple times in a week, I'm going to win really big on the week just by hitting this 1.5 break-even decision. Also call it, you'll hear me call it the 1.5P. You know, that's, I also use this for the close 32. So we could actually go in here and call it close 30. Or just put 30. We'll see CL30. So you'll see me use this 1/2P against the close 30 as well. So let's save this spreadsheet so now I'm thinking about it. So you'll hear me. This is also the target that I'm after on more times than not in the last 30 minutes of the trading session. That is 1 to 130. But anyway, so this is the target minimum that you're looking for on the trade. In this case, what we're looking for, 20.55. The 1.5P is to try to get to 1970. Now, that would be 85 ticks off the high. So there's two places you could have sold it. My suggestion is right here at 20.31. So that's what, a little bit over that. And your stop in this case would be a little over this point right here. If you can afford to do so, you'd be looking at about 3 to 5 ticks above the high at 20.55. So you're looking at 20.58, 20.59, somewhere in that area You don't want to be on the 5s and you don't want to be on the 0s. So it'd either be 20, 58, 59, or 61. That would be your stop on this trade right now. So let's just assume that our stop, in this case, we're going to start this trade at 20.59. Now this you're saying, okay, David, you're curve fitting. No, you'll find a lot of trades work out this way. What you need to do is let it set up first. So it's a very quick 1, 2, 3, but you can actually see it. I hope you can see it. At least you should be able to see it. There's 1, here's a 2, and it barely crosses over there. Or you could just say, another way I look at it, in this high volatility, if you stay within 10 ticks of the high, I would say between 7 to 10 ticks of what would be the high. Now this would have been the high of the day at that point, and then this ends up being the high. So let's measure this out. So can you stay within 7 to 10 ticks of the high, and then you want to come right underneath this by 2 ticks. So this one, did it stay within 7 to 10 ticks? The high right here is, there's the high bar. The high bar right there, it was 2050, and then 2055 ends up being the high of this spike right here. Stays at 5 ticks. A lot of times you'll hear me 3 to 5. This is perfect right now. Low volatility, you want to stay between 3 to 5. High volatility, you need to press that out to 7 to 10, 7 to 9, 7 to 10, somewhere in that area. High volatility, you want. So if this, you would still look at this even if it would go up to 2059, is what I'm getting at. 2050 to 2059, you could still use this in high volatility. A little bit safer on the side is just wait for it to cross over, back, and come, and then you come in at 2031. This is my recommendation right here of where to short it from, is 2031. You could have shorted at 2039. You save yourself a few ticks. That'd be what, 8 ticks right there that you could save yourself. That'd be $80, by the way, if you did want to take it on right there. 2 ticks under this red bar, and when it starts pressing up again. So what are you looking for? What I'm looking for is the high to come in. I'm looking for some red bars, and I'm looking for some green bars. At least one green bar that has some breadth to it, meaning it's got a little bit of width, not a little one like this one. I'm looking for a bigger one like this one, and then I'm going to use the low of this bar, 2 ticks under it, and I'm going to get short from it. So you could get short. I'd recommend short here if you're risk averse, then this could be a good point for you. If you want to wait for the 1, 2, 3 a little bit, underneath the highway, then you can get here and set it up at 2031. So these are the 2 points. So regardless of where you set it up, did it go to its 1.5p target? Now you got to measure it from the high. It's be 2055, and the area that we're looking for the market to run to, in this case, is 1970. You'll see a lot of times the market will run 1.5p, even if it's a reversal. So this could be a reversal in the day session itself. You'll see on the high, the market's moving up. The market's going to reverse about 1.5, or 1.5 to 2p. You're going to see a market reversal coming off of that, and then it'll probably go back up. So people are being buying the dip, right? You get your people that want to see it get lower so they can buy that dip, and then they see it come back up again. So you have to exit the trade. You have to have a plan of exit, because if it does go wrong on you, the people that are buying the dip are going to take advantage of that and make it move up. Now, if you have 2 sides of this, if you can trade that second contract, your turtle would be trying to catch the longer targets, the 2, the 3, the 4, all the way out to 10 and 12p. There's that turtle side of the trade, that second contract. If you're trading 3, you're going to still take off 2 at the rabbit or the hare, 1 at the tortoise, the turtle. You still, even with 5, that's the only time. If you're up on the week pretty big, you take 3 out, and then you run with 2. So, or you let the turtle come in with 2. 4, you're going to take 3 out at the rabbit, the hare, and you're going to take 1 on the turtle. That's the best way that I know how to win win your account. You need to take more when it's there. Exit that trade. Where's a good profit target? 1.5p. So once you get to 1p, that's a great place to move to break even. If you haven't moved to break even, you're going to move to 1p. Now 1p from 2055 on this day was 1998. So where did it run? 1998. Right here. So right here it runs 1998. That's a 1p down move from 2055. That's 57, 56 ticks down from the high. This is where, if you have not moved to break even, this is where you definitely want to move to break even on everything that you got. So everything that you got, you were here, now you're here with break even, and you're actually physically probably moving your rabbit back into this. You're trying to keep, so you got your turtle up here at the entry point, wherever you put it. Once here, you see it didn't move back to 2031, right? You already tested that 2031 on this move right here. Now you're coming down. So now this movement here is still validating that you're in a good entry point based upon this high volume spike bar back here. So this is the way you want to handle the trade. Now the target itself, you see I've already put it into the charts here. It's actually 1970, not 1971. So 1970, yes, it does hit 2055. Now, depending upon your profit target, 2031 minus 1970 is 61 ticks. Now, if you wanted to stay in the rabbit side of it, you would look at this movement back. You try to catch this coming back through. You try to catch it and stay on it. You would come off this trade. This would be the bar that you were looking at prior. You'd be coming off 1991. That could be an exit point. Round here could be an exit point. Round through here could have been an exit point on your rabbit. I would suggest that your rabbit side of the trade, if you're only trading one contract, would have been right around here. This area right here, when you weren't able to get through here, this would have been a great point to get out of the trade itself. It ends up seeing some red down here, right? We start seeing some red coming in the market. Hopefully you can see that. You start seeing some red coming in the market, it pretty much offsets that high blue bar that's back there. All this red right here is offsetting that high VB that we had in the market. So this is the point that you want to tighten your stop up, right, when you start seeing this coming in. Especially this. This would have been the point to tighten that stop up and clear out that rabbit. This would have been the optimal point to take this trade out right now. If you're perfect, that's obviously if you're perfect. I caught some of this day on that day. I didn't catch it all. I think I was coming from a loss to get. I think I was in a loss position, and this ended up being my first day of trading, if I'm not mistaken, or second day of trading. Anyway, it was one of those. Let's see what day I'm on. I'm on day 8. So I think this might have been my third day, second. I don't know. Regardless, whatever day was, this is my all-time favorite day trading setup. I call it the HVS sky when I can find it. The HVS sky, and it's got to be a blue. In other words, I'm looking for a top. So I'm looking for a top reversal. So this is my all-time favorite trading setup that I look for in the markets. When I find it and I see it, now it doesn't happen very often, but when I find it and I see it, man, I'm going to take it. I'm going to try to get as close as I can to that high spike bar that I can physically get to. I'm going to be looking for that setup. Once again, let's review what it looks like, all right? It looks like this. It doesn't always look like this, but this is an example of what it looks like right here. So let's blow this up a little bit. So hopefully you can see that. So this is what I'm trying to get, what you should be looking for. So you're looking for the market to come down off the spike. You're looking for it to settle, and this is the most important bar that you're looking for. This one right here. That green one right there. You want to see something of that nature, and you want to see it test the level. Ideally, this is the way you want it set up. You want to see it come through and retest the spike bar that just formed. A lot of times it won't get anywhere. What you're going to see is either like this, underneath it, you're going to see it come a little bit higher, or you'll see it do this. It won't even get anywhere near it. Or failure is obviously like that, right? That's failure. You've got in, it never even comes here. It never comes in, and then it just goes up to a higher high. So then you're standing aside and you're looking for another high volume spike. Usually when you see a volume spike and it fails, in other words, it comes down and goes up this way, it's usually going to start making higher highs on the day. it can be dangerous. So you need a spike bar a lot of times even greater than what you had to start with. All right, so that's 15 minutes of talking today. I'm going to put this up. We'll do it as a premiere video today on Sunday. Let me set this up here the way I want it. And as you can see, the markets are open on Sunday here. This is Sunday evening here in the States. This is what it's looking like right now. Now, personally, I used to look at when do you trade. You finally got to come to a point of when you want to trade. I want to trade at 8 a.m. CST. That's when I want to start looking at, well, I'm going to look at it 30 minutes prior to an hour prior, but I'm not going to start my trading day until 8 a.m. CST. That's a rule that I've made for myself now. I'd like to trade it earlier. Sometimes you can find some really nice trading decisions in the early morning. I like to sleep. That my trading day starts at 8 a.m. and I try to finish up around about 10:30, about 2.5 hours. Is roughly what I'll look at in the mornings, Monday through Friday. And then I'll look at the last half hour of trading. A lot of times I want to do that on the day that I'm winning big and the market's really moving up. The best trades that I find, the close 30 strategy, when the market moves up significantly and you're trying to take a short off of that, or it moves down significantly and you're trying to take possibly a long or a failure on that bar and for it to come on down even further. So those are the two best times to trade the close 30. This one here is the high volume spike, what I call the HVS sky. So once again, as I had talked about it before, my favorite trading setup is called the HVS sky. It's a blue bar. So it's a blue HVB. And what I'm looking for is a top reversal. There's some good power in that trade when you can find it. All right, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. I'll see you in the next video I put together. Bye for now.